Good morning from the Protos newsroom. The date today is Tuesday the 24th of November, and you're listening to the Protos Daily. These are the main headlines this morning. Blockchain forensics outfit Chainalysis raises $100 million to achieve unicorn status. Ethereum 2.0 reaches its staking threshold just in time, and the IRS caught sending bogus letters to crypto traders. At the present time, Bitcoin is trading at $18,840, up nearly 1.4% for the day, while Ripple and Stellar have stolen the spotlight in the past 24 hours by gaining 33% and 40% respectively. If there's one US government agency glued to the price of Bitcoin, it'll be the Internal Revenue Service. In its most recent bid to extract as much tax revenue as it can from crypto holders, the IRS could have sent out thousands of erroneous tax notices, demanding investors pay up to hundreds of thousands of dollars for underreporting their crypto-related income in the past few years. According to tax gurus CryptoTrader.tax, dozens of individuals have come forward to report that they'd already received notices demanding penalties to be paid, the most extreme of which was a $127,000 bill for allegedly underreporting annual income by more than $250,000 back in 2018. In reality, it was the IRS that owed the recipient more than $2,000, as they'd actually lost on their crypto investments that year. CryptoTrader.tax says the problem stems from how Coinbase reports its user activity to the government, which is via a form called 1099-K. The firm said that 1099-K was never meant to be a form for cryptocurrency exchanges to use to report income. It was designed to report earnings from platforms where you are being paid directly by third-party merchants like Uber, Lyft, and Etsy. The form does not make sense in the context of cryptocurrency exchanges, and yet many prominent exchanges like Coinbase have decided to use the 1099 form to report customer earnings information. Last year, the Internal Revenue Service offered its first crypto-specific guidance in 5 years and encouraged crypto holders to declare their earnings from the past, apparently hoping the honesty system would result in a wave of uncollected tax. For what it's worth, CryptoTrader.tax says that you should consult a tax advisor if you've recently received a crypto-related letter from the IRS. In most cases, the issue can be reportedly resolved by correcting the IRS on its mistake in writing. Blockchain analytics crew Chainalysis has successfully raised $100 million in a Series C funding round to bring its total valuation to $1 billion. The round, which saw participation from Accel, Benchmark and Ribbit, officially gives Chainalysis unicorn status, alongside roughly a dozen other crypto companies to hit the $1 billion mark. The firm has previously worked with the likes of Europol, Interpol and the IRS to track alleged criminal crypto-related activity, and was recently recruited by the US Department of Justice to help trace more than $1 billion worth of Bitcoin and other crypto seized this month. Chainalysis says the newly raised capital will support the company's international expansion and help it to establish relationships with government agencies, financial institutions, and other private businesses around the world. This latest funding round more than doubles its previous deal closed in July, when it raised $49 million. Chainalysis has seen 100% growth in recurring revenue year over year in the third quarter of 2020, and its revenue is expected to double next year and again in 2022, according to Forbes. It's worth noting that Chainalysis is not the only blockchain analytics firm in the sector. Competitors Elliptic and CipherTrace have both found similar success in recent years, but have so far raised a fraction of the funds that Chainalysis holds. Last night, the Ethereum community hit the staking threshold needed for Phase 0 of Ethereum 2.0's multi-stage launch, the first step on the blockchain's path to switching from a proof-of-work consensus algorithm to one based on proof of stake. There's currently more than 600,000 Ether staked in support of the transition, representing nearly $368 million US, more than $49 million than was initially required. With this, the rollout of Phase 0 will begin in a week's time on December 1st. The Ethereum upgrade, which has been in the pipeline for years now, will purportedly make the blockchain more efficient, secure, and scalable. However, we won't know for sure until it's complete, which could take more than 2 years from here. All Ether staked for the upgrade must now stay there until then, and it's hoped that the promise of the higher block rewards for early stakers will be enough to keep them happy. The price of Ethereum continued to gain momentum after the Ethereum 2.0 deposit limit was reached, rising 6% to reach $619, before dropping 3% to its current level of just over $600, its highest point since May 2018. Coinbase says its custody services have attracted $14 billion worth of crypto since April, bringing the total value of its digital assets under management to a staggering $20 billion. In a recent YouTube interview, the exchange's head of institutional coverage, Brett Tage-Paul, noted that institutional interest in cryptocurrency is multiplying week after week, with investors appearing to take the lead from recent Bitcoin backers like PayPal, MicroStrategy's Michael Saylor, and Wall Street billionaire Paul Tudor Jones. As for why big players are choosing Coinbase over their competitors, Tage-Paul cited the company's willingness to be regulated in the same way as a bank, as well as its acquisition of Tagomi in May, a New York-based brokerage that specializes in executing trades between $250,000 and $2 million. Tage-Paul says this helped Coinbase boost its trading volumes up to 20 times. There are already many words that you could use to describe Sean Ono Lennon, John Lennon's son, Yoko Ono's son, or even moderately successful musician, who happens to be John Lennon and Yoko Ono's son. But in addition to all these things, it turns out that he's also a massive Bitcoin fanboy. Speaking on the Orange Pill podcast this week, Lennon was more than a little complimentary when discussing the currency, describing it as something that transcends the physical world, and claiming that it empowers individuals in a way that they haven't been empowered before. The former Beatles' son even went as far to say that, in what has been an otherwise destructive year, Bitcoin has given him a kind of optimism. However, despite his obvious love affair with Bitcoin, it hasn't been all plain sailing. During the interview, he also revealed to host Max Kaiser that he first purchased Bitcoin years ago but forgot his passwords and key phrases, and ultimately lost his entire investment. The founder of the wildly popular DeFi protocol Yearn Finance is readying to launch a new platform just 6 months after his first. Andre Cronje, who launched the Yearn DeFi protocol in July this year, says his new Derry Swap platform will combine the supposed best that DeFi has to offer: blockchain-powered swaps, options, and loans, all in one platform. The move comes just months after Yearn's native token Wi-Fi multiplied more than 51 times in 2 months, before crashing more than 80% over the next 2. Wi-Fi currently trades at just under $24,000, more than 40% below its September all-time high. At the moment, details are scarce, with even the launch date of Derry Swap yet to be announced. Cronje says the protocol is currently being audited, and unlike Yearn, the new platform won't feature its own native token, a fact that's done nothing to deter scammers from issuing and selling more than $53,000 worth of their own fake Derry Swap tokens in less than 1 day. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protoss Daily on Spotify, Apple Podcasts, and all other major podcast providers.